Good morning. Welcome to Market Day Report. I'm Tony St. James, and we roll into a Thursday, and we do have a couple of big things coming out today. We have jobless claims. We'll get the initial. We'll get continuing. We'll also get EIA stocks report. This will be for gasoline and for crude stocks. So those are just a couple of things we'll be watching for later this morning. Normally on a Thursday, we get a weekly export sales report from USDA, but that's been delayed just a day because of Labor Day on Monday. So the holiday shortened week pushes that report to tomorrow. What about overnight and how we've been trading? Well, let's go to the corn market, which in overnight session had been lower. The December contract at 410 off 2 3/4 cents. And you see March, May, July all in the red. Actually, we saw a lot of red in overnight trade with the November soybean contract at 10.12 off 9. 8.5 cents lower on most other contracts. Meal, I believe, was higher, but oil lower overnight. Now for the wheat market, lower trends there as well. September at 563 3/4, down 1.5 in Chicago, with July 610 3/4. That was 7 lower. What about hard red winter wheat? Kansas City, 3/4 cent higher on September, 586. July, 6.5 lower at 609.5. Spring wheat, Minneapolis, a big bump up on the September, but December penny and a quarter lower, 622.25. Finally, cotton market overnight session, 69.87 on new crop D's. That was up 6. Brian Hoops is with Midwest Market Solutions. We talk with Brian, I don't know, 3, 4, 5 times a week here. And let's just start with where we traded yesterday and some of the expectations for today. What will you be watching?
Good morning, Tony. Well, no exports to talk about this morning. No private sale again. That's the second consecutive day that we have not had a private sale. That could be a little bit disappointing to the trade. That's a lot of rumors out there that China is an aggressive buyer of U.S. soybeans, and it has not been reported that way. Of course, FC Stone numbers that came out yesterday, they increased their yield slightly in corn to 182.9 bushels per acre, soybeans up to 53 bushels per acre. And the production numbers that they gave us, 15.1 in the corn and 4.575 in soybeans. That would be a new all-time record for soybeans, and the third largest corn crop we'd ever produced, trailing last year and 2016, I believe. So looks like this crop is going to be big. What we've seen here recently is markets try and kind of weaken in the overnight. We trade lower, and then when we open the day session at 8:30, we find some strength and prices start to move higher. That's funds coming into the market who generally don't trade at night. So they're coming into during the day session, buying some of these short positions back, and a lot of this is technical related, not necessarily fundamentally related. So, it's kind of a contrast between the technicals, the fundamentals. Fundamentals will win out longer term, but it just is kind of here in the short term, giving producers, I think, that another rally if they are getting out in their fields and they're not going to have enough storage to make some sales. If they want to look ahead to the 25 crop, you have November beans above 1050, corn in that 450 range for December corn. There's some opportunities out there that producers should be taking advantage of.
Hey, Brian, should we also be watching the wheat market? I think, 6 consecutive closes higher for both Chicago and Minneapolis, and Kansas City's been on a pretty good run as well.
Right. Yeah. You look at all these markets. Wheat's been higher like 6 days in a row. Corn's been higher 5 of 6, and soybeans 7 of the last 8, something like that. It's been really a very strong technical rally over the last week, and that won't last forever because you just don't have that fundamental support. We're still trying to find a price level that's going to stimulate demand for the wheat. The one caveat is it's really dry in the southern plains, and there's not much in the way of forecasted moisture for at least for another week, and that's going to slow down the winter wheat seedings in the plains until we get some moisture because the ground is rock hard. There just won't be that much winter wheat being planted until we get some actual moisture. So there's where we could add a little bit of premium into the marketplace.
Yeah, good point there. You know, we can see drought monitor and see areas starting to move back into drought, which really that's on the map, but actually in the field, when you get out and see some of those cracks, it's pretty amazing. So let's use wheat as a segue to talk about livestock futures. We'll come back in just a moment. We'll talk live and feeder cattle. We'll also hit hogs as Market Day Report continues in a moment. This is Market Day Report. Welcome to a Thursday morning. How about we look at livestock futures from yesterday and live cattle settling in mixed territory. The October nickel lower, 179.22, while the December gained a nickel to 178.90. What about the feeder story from yesterday? September, $1.75 higher, 239.62. October up 187 at 237.45. And the hog trade from Wednesday, 95 lower on October, 81.57. And the D's down 110, 72.70. Throw in here Class 3 milk futures as well. Off on yesterday's trade with October down 25 at 22.75, but still when you look at it and just what we've seen from milk this year, year over year, up 22%. Let's bring back in Brian Hoops, Midwest Market Solutions. When we took a break earlier, we had talked about the dryness in the southern plains and planting of wheat. In many instances, we'll use the wheat for grazing purposes, which brings us into the conversation on cattle. What are you watching there?
Well, yeah, if we do have very dry conditions, we don't get that wheat planted, we aren't able to graze it. Those cattle will move off of those pastures and move off of the wheat lands into feedlots even quicker. So there'll be a little bit of a supply hiccups throughout the winter months, in my opinion. That the numbers suggest that we're going to have some numbers that are going to be larger during times of the year, maybe a little bit tighter during other times of the year. This week, anyway, we're looking for cash trade to be steady to a little bit higher. The packer margins are pretty deeply in the black, about $59 a head. The kills this week, we're limiting them because of the holiday shortened week, so that's helping the boxed beef, and we're steady mix a little bit higher on the boxed beef. Suggest anyway we should have that steady to maybe $1 higher cash trade this week. The futures market, rallied on Tuesday and then just kind of languished on Wednesday's trade with just very choppy market action, waiting for where that cash trade's going to be. So it could be another affair like that. At least it kind of feels that way. Stock market has sold off a couple days now. Now it's trying to claw its way back, and maybe that'll help support some of this cattle market as well, and feelings that maybe demand will come back if the stock market holds steady.
And again, on the demand side, watching what happens with our export partners as well. So again, we'll get export sales tomorrow. And I know, Brian, you'll be back to help us digest that. Brian Hoops is with Midwest Market Solutions.